What's going on, everybody? Welcome back to Third Wave Trades. We have a lot to cover in this Tesla update. It's been a while since I've made an actual video to update you guys, but I've been doing a live stream and the people have been joining me there every morning for about the past 2 weeks now. We've been doing live technical analysis on this Tesla play at 9:30 with market open. So we've been following the play more on a micro scale, but this is going to be a full update on what I see is happening and some of the possible scenarios that could potentially play out on this move. All right. So before we get started, guys, quick disclaimer: I'm not a financial advisor. This is not financial advice. Please do your own due diligence and research, and/or consult with a financial advisor before making any trading or investment decisions. Secondly, guys, if you could please hit the like button down below if you guys find the content useful, and please subscribe to the channel if you guys want more Elliott Wave breakdowns on your favorite stocks, cryptos, and commodities. All right, guys, so let's not really waste any time. Let's just get straight into it. I want to talk about a couple of the macro things that I think are important. Obviously, we have earnings coming out next week, and really the position that I'm taking is that I wanted to see in the next couple of days how the price action plays out in terms of its Elliott wave count, and that way it can kind of help me gauge what I think is going to happen on earnings. Right, so just a quick recap and reminder. We basically are in this 1, 2, 3 count, right? So we're looking for an impulsive move, right, to finish higher on this third wave, and then from there we would look for a pullback, for a fourth or a sideways correction, and then a final wave, a fifth wave, to go higher to all-time highs, right? So that's scenario one. Scenario two is, instead of having a 1, 2, 3, 4, 5 count, we're actually having a 1, 2, 1, 2, and basically, instead of moving higher from this point, as you guys can see, we are still within this channel. So as long as we stay within this channel, um, and we keep rejecting and we don't break out of it, I don't think that we would be in a third wave move. We're very likely in just a 1, 2, 1, 2, which will set us up for the impulsive third wave rally. But this would actually lead to a steeper retracement, possibly coming back and filling this gap, this green area that I have highlighted here, somewhere around there, and then we can start more impulsive rally uh, before before we reach those all-time highs, right? So we have this pullback, and then that's a strong move, right? So long term, this would actually be a more bullish play, but it would call for a steeper retracement, at a rejection at this channel top, right? So those are a couple of scenarios that we're looking at in the macro term, and we'll get into towards the second half of this video the micro count of this wave to see which scenario we think is playing out. All right. So with that being said, some other key things to keep in mind and to look at. So I told you guys before that we have we had this descending level of resistance, right? So we've broken out of this level of resistance, which is a really good sign, right? I told you guys that this was something very similar that we saw with Apple, a descending level of resistance that we tested multiple times, we rejected, and this time around, even with Apple, we rejected, we pulled back, and now we pushed above it, and we've basically been consolidating above it, and now we've basically taken over that, right? So that's one level of resistance gone. The next level of resistance is basically, like I said, this base channel, right? This channel that we create from the first wave up and the second wave down. Um, in order to get a true third wave, you really have to break out of this channel, right? So without a breakout of this channel, um, I believe we're most likely in a 1, 2, 1, 2 situation. And just looking at the count from a macro perspective, you can see that we have a 5 wave count over here, that we could call this move done, right? So you could easily count this as a 5 wave move and then expect an ABC pullback, like I said, towards this gap area before we rally higher. So um, this level is going to be pretty crucial, right? So if we take a look at the base channel, we rejected here once, twice, 3 times, four times, right? Because we didn't really get a strong confirmation outside of this channel. We pulled right back, and now today we kind of touched it and we pulled back again. So it's definitely a strong resistance. Now, if we can break past that, I think we will definitely push higher. But if we reject, keep in mind that other scenario that we're in a 1-2-1-2 as opposed to a third wave. Now, we have a minor resistance over here at 290, so that could also play out. And then if we could get past this channel and we could get past this minor resistance at 290, which I don't see being much of a threat, we have this strong resistance at this triple top area at 314, right? And just in general, right, it's a heavy supply zone um, around that 310 to 314 area. So there's a good chance that even if we break out of this channel, we could push into this zone, um, and then from there reject and come back down to this gap as well, right? And that still would I would still consider this more of a 1-2-1-2 setup as opposed to a third wave move, even though we would break out the channel, because in terms of an extension of the first wave, it would only be about 123 to 138%, right? So if we get to this, it would literally be the 138% extension, and that is usually a good marker for a 1-2-1-2, right? For basically, when I say 1-2-1-2, what it essentially means is that the third wave, it is still the third wave, but it's an extended third wave. And this whole move would just be the first wave of our third. So you have your first wave, second wave, first of your third, second of your third, and then you get a really, really impulsive move to the upside, right? So again, long term, more bullish, but short term, it would provide a deeper retracement. So one strategy would definitely be to take some risk off by, if we do get to this level, being that there's a heavy supply zone, that we have a triple top resistance, um, to just possibly take some of your position, take profit over here, and then wait for a retrace if it does play out, and buy back at a lower level. All right, so that's kind of like the macro picture. Of course, if we break past the 314 area, then I would be looking at this 340 level, right? Because that would be the 161.8% level, which is a standard third wave move. And then from if we could break past that, then the 380 is also a valid level for a third wave move. Other things to consider in terms of our indicators, we do have this bearish divergence playing out, right? So I think I brought this up in the last video as well. We can see it playing out. And now it doesn't mean that we have to sell off right away. We can still continue to go higher as this bearish divergence plays out. But again, the longer that this plays out like this, as we're making higher highs and higher peaks in our price action, but lower peaks on our RSI, the greater chance, greater likelihood that we're going to pull back, right? So essentially, what it looks like we would be forming here would be a rising wedge or an ending diagonal. With that bearish divergence, could lead to that strong sell-off, right? So keep that in mind. Now, it is possible that we eliminate this bearish divergence and move higher, in which case we wouldn't, in which case you don't have to worry about the sell-off coming if we eliminate this, right? So keep an eye on the RSI, or if you guys use the MACD, keep an eye on any bearish divergence occurring between your price action and your oscillators. All right, another thing I wanted to discuss is our EMAs, right? So you can see, guys, we are still pretty bullish on our EMAs, right? So we are above our 21 EMA, right? Just moving averages in general. We're above our moving average, so that's very bullish. As long as we're above that, I think we are bullish. And we didn't even come down to retest it. So, we came close over here and we bounced, and over here on this pullback, we stayed well above it and we bounced up. So as long as we're above this 21 EMA, I think we are looking good, right? If we were to break that, then obviously we have our 50 EMA, which is right around that gap zone. if we take a look at volume, we can see we've been having lower volume days, but that to me is kind of consistent with the fact that we've basically been in these retracements and consolidations, right? This sideways correction rate basically, which has been playing out. So now we can see that the price action is starting to pick up again, and price action is going up as well. So that looks very good. That looks bullish, and may lead to increased prices. Finally, guys, there is something that I wanted to mention um, in terms of the earnings being next week, right? So one thing that I find pretty interesting, I kind of marked it off in a couple of places here. Um, if we go back and take a look at some of our previous earnings, right? Uh, the 21 EMA, right, which basically is our indicator for whether or not we are in an uptrend or a downtrend, uh, has been really key in helping us kind of determine what's going to play out with earnings from a technical analysis standpoint, and I use it in conjunction with our wave count as well, right? So um, we have earnings coming up. You guys can see we are above our 21 EMA, so we are in a bullish uptrend, right? If we go back to our last earnings, which we actually gapped down on, you can see we were below our 21 EMA, right? So essentially we were in a downtrend, right? Our 21 EMA was actually crossed over below our 50 EMA as well. But we were also in this retracement, this ABC move, right? So based off of the wave count, I was I was bearish on this earnings play and said that most likely we were headed lower because at the time we had this A wave play out and this B wave, and we were uh, basically in the middle of this other this C wave. So because it aligned, right, we were in a downtrend move and it aligned with a retracement move on the wave count. I basically was saying that I was expecting the earnings to not be a beat, right? Not that it wasn't going to be a beat, but that we would see a lower price action, right? So if we go back to the earnings before that, we were in this uptrend move, right, which aligned with our first wave up, and we had earnings on January 26th, 25th, and you can see we gapped up, right, creating this gap. We were in an uptrend move above our 21 EMA, 21-day EMA. We were in a first wave move going higher, so I was pretty bullish going into earnings, thinking that we would go higher. Go back to the previous earnings, you can see again over here we gapped down. We were below our 21 EMA. We were finishing off a larger C wave move from a larger retracement. If you go back to the earnings before that, you can see same thing over here. We gapped up. We were above our 21 EMA and in a B wave recovery, right? So it's been a pretty good indicator of what happens in earnings, right? So right now we are above our 21 EMA. I do expect us to go a little bit higher just based off of the wave count. So I think I'm bullish going into earnings, but of course we have to see what happens Monday, Tuesday, and Wednesday during the day. But if we come back to test the 21 EMA and I could see a bullish reversal on that move, it would give me a little bit more confidence that we are bouncing off of our 21 EMA. We're still above it, and we could go higher. If we break below the 21 EMA in the next 3 days, it may be an indication that the earnings is going to be a catalyst to the downside, right? So just something to keep an eye on. It's just an interesting point that I noticed. Now I kind of want to go into a little bit of detail of what I see playing out in the micro count for this move, right? So I kind of have two counts right now. One is sort of less bullish, one is more bullish. And we'll start off with the less bullish count first, right? So essentially, we're looking at first wave up. I put the price action using a line graph because it's easier to see, right? So first wave up, you guys can count the 5 waves, right? And our second wave down. So that's our initial 1, 2, 1, 2, 1, 2, 3 4 with an extended fifth, right? 1 2 3 4 5, 3 4 5 4, and now we're finishing up this fifth wave move, right, which corresponds to this first wave and the second wave, right? So 1 2 is corresponding to this uh, 3 4, and then we're getting this fifth wave move right here, right? So um, if that is the count, then we're looking at this basically ending in a ending diagonal, right? So 1 2 3 4 5, right? And then from there, right, that's our rising wedge uh, ending diagonal pattern, and from there we could get a sharp sell-off if this bearish divergence continues. All right, and you guys can see these teal lines that I have, right? One is an ascending level of support that's been pretty good, right? That's our trend line of support, and the other one is just that basic channel top that has provided resistance for us on the top of that base channel, right? So it's kind of both lines are kind of converging to create that ending diagonal or that rising wedge pattern, right? So that's the less bullish count, and then I can show you guys how that's playing out on a more micro scale. That's kind of like what we've been watching on the live streams over here. This screen on the right, right? So that's kind of what we've been watching. So I'm looking to see come Monday if this continues to play out, right? So we'll keep an eye on that in the live stream. Now the other count, which is slightly more bullish, um, which could possibly take us to, oh, by the way, this move would take us to roughly around $295 before we get that sharp sell-off, right? And this would confirm the 1 2 1 2 count in the macro sense. So the more bullish count would look something like this. Basically, it would see us going to at least that 314 level, possibly even up to like 340, right? So um, that is basically counting this move as it's putting the most extended move right in the center, right? Where we had the strongest rallies, putting that move in the center of this entire wave. And then we have a 1 2 1 2 1 2 1 2 3 4 5 4 5 4 5 is still playing out, but it would only be the third wave of this 1 2, and then we would get this sell off in a similar way, um, an ABC after a rising wedge or ending diagonal, and then from there we would get one last impulsive move to the upside around that 314 to 340 level. Alright guys, so that's basically how I'm looking at the play right now. Me personally, I'm slightly more bullish than I am bearish, and I believe that we are going to have a more impulsive move, and I do think that earnings will come out pretty solid. But again, I'm still playing it by taking it one level at a time, and I think that's the best way to play it right now. So again, just a quick reminder: we basically have this channel to break out of, like a more solid breakout, is what we're looking for. We have a minor resistance at 290. We have the supply zone area around the 310 to $314 level, and our 161.8% extension of wave one, which would make this a true third wave, would take us to around that 340 area. All right, so that's really how I'm looking at it for now. We'll see what plays out on Monday, Tuesday, and Wednesday during the day, and we will go from there. If you guys are interested in joining me, I will be live streaming again on Monday morning at 9:30 a.m. We've been doing it, like I said, for the past 2 weeks now. We've been live streaming this Tesla play, and we take a look at some of the other tickers as well as the Triple Q and the SPY. So I will be doing that for another week or so, probably to the end of this Tesla rally, and then after that I will be live streaming on my Patreon if you guys want to follow me there. That should be up in the next 3 to 4 weeks. The link is in the description box below, as is my Instagram that I just made and my TikTok. So if you guys want quick updates, follow me on my Instagram and my TikTok. It's at third_wave_trades. Um, and that's it. If you guys find the content useful, please hit the like button. And if you guys haven't already, please subscribe to the channel if you guys want more Elliott Wave breakdowns on your favorite stocks, cryptos, and commodities. I will be back with more. Peace.